This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
Art of the deal, a blockbuster healthcare acquisition with a price tag of $66 billion. And it apparently closes the door on one of the most audacious takeover attempts in recent history.
Recession surprise. Japan's economy unexpectedly contracts despite massive efforts to spur growth. Will the U.S. feel the chill?
And hanging in the balance, do supporters in the Senate have enough votes to approve the Keystone pipeline? What will the president do if the Senate acts? And which companies could benefit big time? All that and more tonight on Nightly Business Report for Monday, November 17th.
Good evening, everyone. A big day for big deals today. The buzz on Wall Street was all about two blockbuster mergers. One in the energy sector. We'll have more on that in a moment. The other in the healthcare sector. We begin with the bigger of the two deals. Generic drug maker Actavis agreeing to pay $66 billion for Allergan, the company best known as the maker of Botox. The massive price tag, which amounts to $219 per share, effectively ends a month-long hostile bid by billionaire hedge fund manager Bill Ackman, along with Canadian drug maker Valeant for the same company. Investors approved of the matchup. Shares of Actavis rose more than 1.5%, while shares of Allergan jumped 5%. More now on how Actavis sealed the deal. The bidding war for Botox maker Allergan didn't end up quite the way Actavis investor Bill Ackman was hoping for.
As more potential partners or combination partners say they're not interested in Allergan, that puts Valeant in a stronger and stronger negotiating position.
Back in April, Ackman started the bidding with Valeant's $53 billion offer, an offer Allergan fought off vigorously. Ackman's final bid topped an earlier offer from Actavis, but wound up being no match for the $66 billion deal announced today.
The offers never came even close to the intrinsic value of the company. As of Friday, the implied offer was $183, so, $11 billion, give or take, away from what Actavis is willing to pay for us. And I really feel that this is a fair price.
So what is Actavis buying? Growth. Sales growth at Allergan has often exceeded 10% a year, not the norm for most big pharmaceutical companies. How? For one thing, Botox isn't just about wrinkles anymore. It's being used to treat migraines, dry eye, and even neurological disorders like MS. That's why Allergan favored Actavis and its commitment to earmark almost $2 billion for research and development.
R&D is the lifeblood of our industry. We have one of the greatest combined late-stage development portfolios in the industry, which will sustain growth for the foreseeable future.
Analysts say the deal will also cut Allergan's taxes by almost $300 million. That's because Actavis recently moved its headquarters to Ireland, where tax rates are much lower than here in the U.S. Despite the intense battle to buy Allergan, Ackman still made out quite well. He is Allergan's largest shareholder. The value of his 10% stake has surged, giving him a profit of more than $2 billion. And Actavis says that with the acquisition of Allergan, the combined company will have more than 24 new products in late-stage clinical testing.
More now on the other major merger confirmed today. Halliburton, the world's second largest oilfield services company, has agreed to buy out the rival Baker Hughes, number 3 in the business, for nearly $35 billion in cash and stock. The deal was driven by the 30% tumble in oil prices just since June. It's forced energy companies to cut costs and streamline production, making less work for both companies. Shares of Baker Hughes today up about 9%, but Halliburton fell nearly 11%.
Another deal is also making headlines today. Pfizer is teaming up with German drug company Merck to develop a drug to treat cancerous tumors. Pfizer will pay Merck $850 million up front, plus a percentage of sales. The drug maker also lowered its 2014 profit outlook in part because of the cancer treatment partnership.
And yet another possible merger that was reportedly in the discussion stage last week has apparently broken down. The Wall Street Journal says that deal talks between DreamWorks Animation and the toy maker Hasbro have hit a major snag over the structure of the combined company, and that those talks are not likely to resume. Hasbro shares weren't playing around today, rising more than 4%, but the curtain really did come down on shares of DreamWorks. They lost 14%.
On Wall Street today, stocks traded in a narrow range of gains and losses, despite all that merger activity and expectations for additional stimulus measures in Europe and Japan. The Dow added 13 points, the Nasdaq was down 17, and a 1-point gain in the S&P was just enough to notch a new record high.
More now on Japan. It's the latest global economy getting weaker instead of stronger. Today, Japan reported really terrible economic data despite massive, even unprecedented efforts to stimulate the economy. Michelle Caruso-Cabrera has the story.
Economists had expected Japan's economy to expand last quarter by more than 2%. Instead, the Japanese economy declined by 1.6%. This after it fell a whopping 7% last quarter. So Japan is now officially in recession. Economists blamed it on a big increase in the national sales tax earlier in the year, which the government raised from 5% to 8% back in April. They thought those effects would have finally worn off by now, but they didn't. The Japanese economy has struggled for nearly 2 decades. When measured in yen, that's Japan's currency, the Japanese economy is roughly the same size that it was back in the late 90s. This must be incredibly disappointing to the leader of Japan, Prime Minister Shinzo Abe. When taking office, he promised that both the federal government and the central bank would do much, much more to stimulate the economy. There would be more deficit spending and printing money. Today's results raise questions about the future of any further measures. When it comes to Japan's effect on the United States, one member of the U.S. Federal Reserve says it just adds to the global headwinds blowing on an otherwise improving U.S. economy.
The issue for us, it really is global growth is weakening in a number of jurisdictions. Europe is very weak. China has weakened. Japan is weak. There is weakness in Latin America. We haven't felt that here in the United States yet. But the risk really is that we will begin to feel it through the trade channel or other channels. But again, we don't feel it yet.
We expect to hear from the Prime Minister of Japan overnight to decide whether or not he's going to cancel yet another increase in the country's national sales tax, which had been planned for next year. Nightly Business Report, Michelle Caruso-Cabrera.
Well, Japan isn't alone. The Eurozone economy is also struggling. And with the European Union likely to announce new stimulus measures to boost the region's economy, J.P. Morgan today downgraded its outlook on the U.S. stock market and upgraded European stocks. It said valuations of American companies relative to Europe are, quote, outright expensive, and that Europe is due to outperform the U.S. markets.
And those markets may be getting a big boost from Mario Draghi, the president of the European Central Bank, who says the bank could buy government bonds to accelerate growth.
If the inflation expectation outlook were to worsen by itself, the Governing Council is willing and stands ready to act. As I said before, it's unanimous in its commitment to undertake other unconventional measures beyond the ones being decided. The other unconventional measures might entail the purchase of a variety of assets, one of which is sovereign bonds.
After those comments earlier today, European stock markets erased early losses, while yields on most lower-rated Eurozone bonds fell.
It was a historic day for stocks in China and for global investors, with a new mutual market program allowing access to Chinese-listed shares for the first time ever. Eunice Yoon has more from the Shanghai Stock Exchange.
ShanghaiHong Kong Stock Connect has begun.
There's a lot of excitement among investors today over what's called the ShanghaiHong Kong Stock Connect. And this is a scheme which started today, which allows investors in both of these markets to invest in the other market directly. And so a lot of people are excited about it because it really is seen as a way for foreign investors to get broader access to Shanghai-listed shares. In fact, the money that is allowed by the Chinese government into the Shanghai market hit its daily limit because investors were buying up all sorts of mainly mainly consumer-led stocks, such as a hard liquor company called Maotai, as well as General Motors' partner here in China called SAIC. Now, overall, the money flows are relatively restricted. We're talking about kind of small numbers relative to the market size, but at the same time, it's seen as a very significant move on the part of the government because it's seen as an important step to try to open up China's financial system. China is the second largest economy in the world, but a lot of people have seen the financial system as a laggard. The financial system, as well as the capital markets, have been largely sealed off. So this is seen as a broader part of the reform effort here in China. And one other part that was quite interesting was that investors here in China, mainly high net worth individuals who have brokerage accounts, were saying that they're looking forward to investing directly into Hong Kong stocks to be able to broaden their own investment portfolios and really have a larger say in the global markets.
That was Eunice Yoon reporting from Shanghai.
Still ahead, the Senate is set to take up the Keystone pipeline bill tomorrow, and if it passes, which companies could benefit? Some welcome relief for victims of Bernie Madoff. The court-appointed trustee charged with collecting funds to help compensate victims of Wall Street's biggest Ponzi schemer says the total recovered now tops $10 billion.
General Motors is giving vehicle owners an extra month to file claims related to those faulty ignition switches. GM's program administrator, Ken Feinberg, explained why the deadline was extended until January 31st of next year.
We want to make sure that everybody knows about this program, and out of an abundance of caution, we'll extend the filing deadline one more month. I don't think there are many people out there, if any, that don't know about this program.
Well, this comes after the family of a Connecticut woman who died in a crash 11 years ago said they didn't know GM had attributed her death to the defective switches until they were notified by a reporter just this month.
Good news for the government's mortgage insurer. It is making money. The Federal Housing Authority is currently about $5 billion in the black. This comes after the agency increased premiums, raised the average FICO scores for new borrowers, and went after rogue lenders.
Well, a very different story for the federal agency that insures pensions for 41 million Americans. The Pension Benefit Guaranty Corporation ran a record-breaking $62 billion deficit last year. That's double the shortfall it recorded just the year before. Most of that is due to the poor financial condition of just a handful of large multi-employer pension plans.
Well, lawmakers will tackle two issues on Capitol Hill this week that could have a big impact on your money and business: immigration and the Keystone pipeline. John Harwood is in Washington for us tonight. John, what is the president preparing to do on immigration and when?
On immigration, Tyler, the president's preparing to issue an order that, using executive authority alone, not legislation, would grant legal status and the ability to work in the United States for an unknown number of millions of Americans or people who are now here illegally. This would be an expansion of the Dreamer legalization that he did a couple of years ago. In essence, it defers deportation and grants legal status while that's taking place. We expect it to be sometime in the next couple of weeks. It's not clear whether the president's going to try to get a government funding deal with Republicans before doing it because, of course, they're angered by this move.
Yeah, well, tell us more on that, John. I mean, how do you think the Republicans will respond?
Well, some of the more strident Republicans in the Congress may even call for the impeachment of President Obama. Of course, Republican leaders don't want that. Others may try to shut down the government or refuse to raise the debt limit in the next couple of months when that ripens again. Most likely, I think, will be Republicans will have short-term funding for the government so as not to let the Obama administration get comfortable and perhaps file another legal challenge in addition to the one that's already in the courts.
All right, let's move to another highly divisive vote. Tomorrow, the Senate is expected to vote on the Keystone pipeline. What do we expect?
The House has already voted to approve the pipeline and push the president to let that go forward. The Senate is going to vote tomorrow evening. It is unclear if the Republican majority plus renegade Democrats, including Mary Landrieu, who is running in a runoff election trying to hold her seat, have the 60 votes they need to move it forward. But if they don't have them now, they're almost certainly going to have them in the next Congress in January.
So let's just say it does pass. How do you think President Obama will respond to that?
President and his aides have both signaled that they will veto the initial legislation on grounds that they're continuing their own administrative review. But the president's not strongly opposed to the Keystone pipeline. I would expect that after that veto, he would see if Republicans are willing to deal with him, give him some of his priorities in return for him going along with Keystone. Question, of course, given what's going on immigration and other issues, is there going to be any appetite for deal making?
All right, John Harwood, thanks very much. A very interesting couple of days and weeks in store in Washington.
One day ahead of that Senate vote on the Keystone pipeline, oil prices were little changed. Domestic crude was off 18 cents to $75.64 a barrel. Now, if the pipeline is approved, what will that mean to oil prices? And which energy companies are poised to benefit the most? Jackie DeAngelis has that story.
The Keystone XL pipeline, a nearly $8 billion project that will bring oil sands crude from Canada down to the Gulf Coast. After a slew of delays, it seems a decision is imminent. A potential approval comes at an interesting time, the backdrop plummeting crude prices. West Texas Intermediate down almost 25% year to date as the U.S. ramps production and the market fears a global supply glut. Proponents of the pipeline argue it will create countless jobs, improve infrastructure, and help transport crude safely. But even if they're right, what will it do to crude prices?
Whether approval of the pipeline is bullish or bearish for prices has supporters on both sides of the issue. The bulls will say that additional ways to transport crude means additional exploration for crude and a potential lifting of the ban on exports. The bears will say that you're moving crude to an area that's already well oversupplied with crude oil.
Meantime, from an investor standpoint, there are many stocks that could benefit from a yes vote here, especially with an energy sector that's been beaten down more than 10% in the last 3 months alone. An obvious play? TransCanada. That's the company building the pipeline. Another? Canadian Natural Resources, an oil and gas exploration company that will send product through the pipe. Here in the U.S., refiner Valero will receive more product to refine. It's already benefiting from the lower leg of the pipeline that became operational earlier this year. Then there's ConocoPhillips and also ExxonMobil. They both have exposure to the oil sands. And a Houston-based company to watch, Quanta Services. It's an infrastructure play. One of its operating units will help build the pipeline.
I think what we've learned in the last week is that the Democrats realize it's going to happen at some point, and so I do think either it happens over the next couple of days by the Senate passing it, or it will happen in January when the Republicans get the majority.
So at the moment, all eyes on the Senate, then the president. For Nightly Business Report, I'm Jackie DeAngelis.
Urban Outfitters' quarterly profit tumbled by a third in its last quarter, and that is where we begin tonight's market focus. The apparel retailer, which owns brands like Free People, saw costs rise, which weighed on its third quarter results. The company has continued to offer discounts and promotions to attract shoppers, which has pinched its margins. Its same-store sales also continued to decline last month, and after the bell, the shares initially plunged. Before the close, shares were off just slightly. They finished at $30.83, down 2 pennies. Tyson saw its shares rise after the chicken and beef producer posted better than expected fourth quarter profits. The company forecast 2015 growth that could top Wall Street's view due to record beef prices, lower feed costs, and its recent purchase of Hillshire Farms. Sales did come in below estimates, but investors overlooked that. Shares almost 6% higher. They finished at $43.03. Promising data on one of Merck's drugs sent shares of that company higher today. The company's cholesterol-lowering medicine, Zetia, met its main goal in a study that tested whether adding it to an older cholesterol drug could reduce heart attack risk. The drug did lower the risk of heart attack and stroke in patients already on aggressive therapy, this in a study that lasted almost a decade. Shares rose slightly. They finished at $59.46.
Shares of drug maker Celldex soared on data showing that its drug successfully shrunk brain tumors. The treatment also improved survival rates in patients without the disease worsening. The stock popped 28% to $18.25. And Facebook is hoping to be a little more office-friendly. According to reports, it's developing a new product aimed at professionals called Facebook at Work. The service will compete with LinkedIn, but also with Google Drive and Microsoft Office by offering tools like shared documents for collaboration. Shares fell slightly to $74.24. LinkedIn also tumbled on the report, down more than $10 to $223.28.
Well, it looks like smooth sailing so far for the second-year rollout of the Affordable Care Act's open enrollment period on the healthcare.gov website. Sylvia Burwell, the Secretary of Health and Human Services, sounded upbeat about the number of Americans looking to sign up for a health care plan.
In the first 2 days of open enrollment, we have seen 1 million visitors to the site. We have had 200,000 calls to our customer center. There are those who actually want to talk to people about it, and 20,000 of those are to our Spanish language lines.
And Bertha Coombs joins us now with more. She follows this story. It sounds, Bertha, as though the federal exchanges are off to a reasonably good start, far better than a year ago. What about the state exchanges?
The state exchanges, you know, half of them last year had some tremendous problems. Quite a number of them actually revamped and rebuilt their entire systems. And they had fairly good results as well. Washington State, which performed fairly well last year, they found very early on Saturday that they were calculating subsidies incorrectly, so they took the site down overnight. But nobody else seemed to have that problem. And in Massachusetts, where last year, even coming into the fall, there were people who they had not been able to calculate their subsidies. They said they actually had about 3,600 people get through, fill out their applications, and determine their eligibility. So that was a huge improvement.
So I'm wondering, Bertha, if things continue like this, going so well, will the exchanges have to have a big marketing push to remind people to sign up, because it's just not going to be in the headlines as much?
Right. It's, you know, it's that high-class problem to have. You certainly want the website to be working well, but at the same time, out of sight, out of mind, Jonathan Wu, who is the CEO of a consumer website called Value Penguin, says, you know, last year it was always in the headlines. So you did get that big push going into December when people were looking to apply. Now they've really got to generate a lot more activity, a lot more news, because it's basically working. So it's no longer really a headline story, at least early on here.
Two related questions I'm going to ask you to answer quickly. Do we know who's signing up? And do we know what, and these are related, do we know what the premium increase will likely be this year?
It depends on where you are. In some markets, actually, the premiums have come down. There's a benchmark premium where they set those subsidies. And one of the things that everyone is saying is that even if you liked your plan from last year, it behooves you to look through and shop, because all of the prices are going to be in fluctuation. And especially if you're dependent on a subsidy, you want to make sure that you find something that matches your subsidy and that you don't just automatically re-enroll.
So the plan you had in this calendar year may not be the best priced or best one for you next time.
It might not be. It behooves you to go through and shop and rework the numbers.
Bertha, thanks so much. Bertha Coombs reporting.
And coming up on Nightly Business Report, finding creative ways to accelerate medical research at a time when government funding for science is coming under pressure.
And finally tonight, with government funding for medical research under pressure, the annual Partnering for Cures conference took place in New York City today on how best to secure industry and philanthropic funding for medical advances. Meg Terrell has more.
Sonia Valab knows firsthand the urgency of seeing the fruits of medical research. 4 years ago, she lost her mother to what turned out to be a genetic disease, fatal familial insomnia.
I was at 50-50 risk for having inherited that mutation. And we decided right away to get me tested. I think we figured we were going to be thinking about it either way, and we wanted the knowledge either way. And so we got the test done, and we learned that I have it.
Now Sonia and her husband, Eric Minical, are on a quest to change her disease's path. They've both begun careers in medical research and founded a nonprofit called the Prion Alliance, dedicated to discovering a treatment or cure. They joined 1,000 others today across industry, government, and research at the Milken Institute's Partnering for Cures conference in New York. It's a community focused on finding creative ways to accelerate research, something Chairman Mike Milken knows well.
You can move things very quickly today, and that's greatly due to this enormous investment by the American people. Over the past 20 years, there are fundamental changes going on.
Milken is known for his work in prostate cancer, and now his organization is spurring work across a spectrum of diseases, from Alzheimer's to drug-resistant bacterial infections to rare diseases, like the one Sonia and Eric are now battling.
Yet researchers warn that pressure on federal funding could slow progress.
Despite all the promise of medical research, the last 10 years have seen a drop in the investments in the U.S. in biomedical research through the NIH of about 25% loss in purchasing power. That has basically slowed down everything.
As for Sonia, her mother passed away around the age of 50. Sonia, now 30, says she's optimistic about their mission.
It's such an exciting time to be in science. I feel lucky about it every day. There are no guarantees for me, and we'll see. I really do believe that it's a matter of time. We just don't know how much time.
For Nightly Business Report, I'm Meg Terrell.
And that is Nightly Business Report for tonight. Thanks so much for watching. I'm Susie Garib.
And thanks from me as well. I'm Tyler Matheson. Y'all have a great evening, everybody, and we'll see you right back here tomorrow night.
Nightly Business Report has been brought to you in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Susie Garib with a Nightly Business Report news brief. Wall Street was buzzing today about two massive mergers. Generic drug maker Actavis paying $66 billion for Botox maker Allergan, and Halliburton paying $35 billion for rival oil field services giant Baker Hughes. Despite all that merger activity, stocks were little moved on Wall Street as expectations for additional stimulus measures in Europe offset news that Japan has officially entered a recession. The Dow added 13 points, the Nasdaq was down 17, and a 1-point gain in the S&P was enough to notch a new record high. Good news in housing. The government's mortgage insurer, the FHA, is now about $5 billion in the black. And chocolate makers are warning about a global shortage of cocoa in the next 5 years. Be sure to tune in to Nightly Business Report right here on your public television station.